Gold prices touched a lifetime high of 60,000 mark on Monday. But what does this mean for the investors? Should they buy, sell or hold? In today's video, we are going to talk about that. Now, gold prices hitting an all-time high on Monday happened due to the US and Europe banking crisis that triggered the investors to move towards the yellow metal. Gold prices hitting a lifetime high indicates slower economic growth and lower interest rates, and that's what the global markets need at this point. In the international market too, gold rose above $2,000 an ounce for the first time in more than a year on Monday. Now, gold prices keep fluctuating on a daily basis, but what does this spike mean for the investors in the near term? Let's get all these answers from our expert.
Gold price hike, the rise is definitely indicating that the markets are, still in the panic situation since last few months. As we have seen the last year also, the performance of gold was strongly, in comparison to all the asset classes, whether it be the risky assets or whether it be the non-risky assets like the dollar index. We have seen the outperformance from the gold prices, and that has been definitely, being factored in by the gold prices that the events such as Russia-Ukraine conflict, or the US-China trade war, or the current scenario where the banking financial is in verge of collapse in the US, and we already have the inflation troubles which have been impacting the interest rate going higher. So this has been relatively giving a lot of confidence for the investors to keep their money parked into the gold prices. So the instability into the return cycle on riskier assets like equities and other currencies against the dollar. This is not helping the investors to pocket a good amount of return. So hence we are seeing this growth into the gold prices, and this trend should continue in the year 2023. We are expecting that the markets will definitely cheer the move from the Federal Reserve, because they are under pressure to not hike the interest rate beyond 25 basis point now. As earlier we had seen, there is a panic due to the higher economic data showing strength into the US. So they were having a very much of a headroom to go with the 50 basis point hike and also continue with their hawkish stance as well. But this time around, the tables have turned very sharply due to the collapse into the banking financial sector, and definitely they do not want the same scenario which was there in 2008, where the ripple effect went on to other sectors and they also got impacted. So here on, I think this will be the very much of a very key policy update from the federal desk, and they will be very keenly watched by each and every players into the market. And there is a lot of pressure that they have to reduce the rates, not by 50 basis point which was expected. So a moderate stance will be that they will be hiking by 25 basis point, and they will have a neutral stance from the hawkish stance that they have been maintaining, and this will definitely help the gold prices on the overall broad perspective. But I think if this is the case scenario which is going to be, then the prices have already factored those moves by sharply rising by a couple of thousand points since the last few days. So this is already priced in. So anything more dovish from their speech or statement will definitely help the gold prices here on. But I don't think so they will be more dovish right now. They will be a little bit of a neutral from hawkish, and 25 basis point which is already priced in. So gold prices will definitely show some amount of correction towards around 58,000, which will act as a very good opportunity to go back into the prices by buying gold again into the MCX. In terms of investors, they are already seeing such high rates. Then the investors, those who have already taken their position into the gold prices, they should be holding on to their price, long positions, because still the year 2023 looks very much bright for the gold prices to scale even higher towards 60,000, maintaining above 60,000. That is what I would like to see. As of now, we have seen the prices touching these levels of 60,000 in MCX and 2,000 odd levels in COMEX, and then retracing from there. So they have been it is witnessed that they are booking their profits because of good level of rates they are getting and good level of returns that they are getting. But if we see historically, then the gold prices in our Indian markets, they have been taking one step forward at each and every 5,000 points hurdle. So earlier, whenever prices were scaling above 50,000, they were retracing back towards 50,000, and that was a base case scenario. Then we moved on to 55,000, where the 55,000 mark was holding on, and any price movement above 55,000, we were seeing the prices correcting, but not below 55,000. So now here on, we might see some amount of correction happening from 60,000 as a base case resistance right now. But broadly, this 60,000 mark, whenever we start breaching above this level, this will act as another support level going ahead. But immediate impact is a little bit on the cautious side. So we might see some retracement, as I said, towards 58,000, 57,000 as well. But broadly, the picture remains positive. So long-term investors need to be holding on to their long positions. Those who are looking to add on to their positions freshly, they need to wait for some level of retracement towards 57, 58, and then they can add their gold positions very aggressively, because the prices are not at all going below 55,000 in this current scenario where the riskier assets are not performing. So I think gold is going to shine like a star in this year 2023 as well, and people need to hold on to their long positions.